What's up everybody, GenExDividendInvestor here. In this video I'm going to tell you why I'm too stupid to sell my dividend stocks. So please do me a favor and hit the thumbs up button, subscribe if you haven't yet, and click that bell notification. Okay, if you're new to my channel then welcome. I've been investing in the stock markets for over 25 years and I'm most passionate about owning companies that pay dividends. I started on YouTube as a way to share my investing experiences with the world, in hopes of educating others to how life-changing it can be to get a steady stream of truly passive dividend income. Of course, when you put yourself out there on social media, you inevitably come across trolls. And that's what brings me to this video. Recently I had someone who said that I was stupid to not get out of the market if I thought a crash was coming. So first of all, thank you for your kind words, my troll friend. And to be clear, just because I tend to hold my stocks doesn't mean you should, nor does it mean I always do. Like, once I sold some of my stocks so I'd have enough cash for a down payment to buy our first home. And one time I actually did sell completely out of all my stocks, which I shared in a video called The Time I Sold All My Stocks. I've also sold some shares of one stock to get into another one I liked more. Sometimes that worked out, and other times I regretted doing it, but I understand why Warren Buffett's mentor, Ben Graham, said that it's smart to sell wisely when prices advance a great deal. So do I think a crash is coming? Yes, of course I do. I can't guarantee much in life other than we'll have more crashes in the future. So why don't I completely sell out and hold cash if I think a market crash is going to happen? Well, a bunch of reasons. For one, I'm lousy at accurately guessing when the market will crash. Like back in 2016, I was talking to my buddy, who owns a wealth management company, and we both thought that many stocks were too expensive. At that point, the S&P 500 was at 2,200. The average PE for that market was a bit over 24, versus the historical norm of around 15, so things were clearly overheated. For reference, today the S&P 500 average PE is at 26 per the Wall Street Journal. The crazy thing was that just 7 years earlier, in 2009, the S&P 500 was at a low of 683 after the financial crash. That means that the S&P 500 had more than tripled in only 7 years. Think about that, tripling in 7 years. Now, I knew that on average the S&P 500 falls 10% about once every 2 years, and that it falls 20% about every 7 years, and falls 30% or more about every 12 years. Most people define a crash as when the markets abruptly fall 10% or more, which means you'd have to completely sell out of your portfolio and buy back in every 2 years on average, if you could perfectly time the markets and you always sold before crashes. Side note, I personally think that a crash can happen on any day in any market, so if we use that 10% crash definition, then I'd never invest. Anyways, knowing how often on average the stock market has crashed is interesting, but more useful to predicting a crash are by looking at metrics like the average PE of the market, the yield curve, and metrics like those. Financial metric trends can't guarantee a crash, but they do give you some clues. Of course, sometimes you'll have a crazy black swan event like a worldwide pandemic, which will crash things. Okay, so there were some other financial indicators that the market was too hot in 2016, but honestly the biggest thing that was causing me to want to get out of the markets was fear. I mean, I still remember the pain of the 2 huge crashes I'd lived through. First was the dot-com crash, where I got decimated since I was so heavily loaded in speculative tech, and even my dividend stocks got hammered. Back in the 1990s, many people realized that stocks had gotten too expensive, but it was the dawn of the internet, and I remember thinking that maybe this time it's different, i.e. maybe those crazy high stock prices were justified because these new tech companies were changing the world. I eventually learned that this time is never different, and that even when big shifts happen in the world, the financial markets eventually settle back into their historical normal trend lines. So if you hear someone saying that maybe this time it's different, well, that alone should be a warning signal. But to be fair, no one really knew how big the web was going to be, though you could see how fast things were evolving, which usually does translate into big business opportunities and failures. I mean, everything was changing, including how people bought and sold products, how they communicated with others, how they could be educated, and how they were entertained, etc. Everything was being reshaped by the interwebs. We had cool search engines like Lycos and Excite. Leave me a comment down below if you remember using those sites. And then you could do new things like buy kitty litter online from pets.com, and they even shipped it straight to your house for way cheaper than you thought was possible. I remember being blown away at how webvan.com was delivering groceries online. Their stock price hit $30 after IPOing, but then the dot-com world imploded. What do I mean by imploded? Well, Webvan fell down to 6 cents a share and then went bankrupt. So yeah, when I'm saying how my portfolio took it in the gut, hopefully you can understand how bad it was. Up until the dot-com crash, I'd only experienced investing in a bull market, so me and my friends all felt like stocks only went up. But that crash helped bring our egos, portfolios, and market expectations back to reality. It was so bad that almost none of my friends even wanted to talk about investing at that point, other than my professional investing buddy who shorted the markets at the peak and became very wealthy doing so. Most people I know that were investing felt so burned that they walked away from the markets and never came back. Luckily, I put my big boy panties on and decided I'd go heavier into my dividend companies and lighter on speculative stuff, because I experienced how established, proven companies held up way better than speculative stuff when things went south. After the dot-com crash, things were bullish again from 2002 until 2007, but then we crashed hard due to the financial crisis. And whereas many experts said the markets were way too hot in 2000, almost no one was worried about a market crash in 07-08. That was another tough crash to live through. Some people were saying that there might even be a run on the banks, which could mean that you wouldn't even be able to withdraw cash from ATMs. Think about how scary that would be if you couldn't withdraw money from your checking account. And then a ton of people had their houses foreclosed on, which is really crappy, and we bailed out the banks that basically created the conditions for the mess, which in turn really turned me off to investing in most financial stocks, and which is why to this day I'm underweight in that sector in my portfolios, though I'm trying to overcome that negative bias of mine. Anyways, from 2009 until now we have been in a bull market, aside from the pandemic crash, and again now we see some metrics are flashing red, so I wouldn't be surprised if we have a big crash. But I also wouldn't be surprised if we kept running for a while, which is another reason why I don't liquidate my portfolio. What I mean is that I could argue why we're going to go up fast, and I could argue why we'll enter a massive bear market phase. But short-term stock swings don't matter to me that much as a dividend investor. What does matter is if I believe that the companies I own will continue providing products and services that consumers will pay for during my life and beyond. And if they do, then why should I sell? Like, let's pretend the S&P 500 falls 70% tomorrow. Will people still buy toilet paper? Yes. Will they keep brushing their teeth? Yes. Will they keep going to McDonald's? Yes. Will they keep drinking Coke or Pepsi while they game on their smartphone? Yes. That's why I invest in the types of companies that should keep doing well regardless of what happens in the economy or in the stock market. And as long as those companies keep making money, then I'll keep getting a cut of their profits in the form of dividends. And now that I'm retired and dividends are paying all my bills, I'm even less likely to sell a stock, which is another reason I don't sell. If I did sell, I could sit on cash and then use that money to pay my bills, but watch my video called A Sad Story About a Dividend Investor, where you'll hear about someone who did sell out of his dividend stocks and now, years later, is still sitting on cash, because fear can stifle even long-time investors. I don't sell because I realize how hard it is to sell out and buy back in, and I find it simpler to just ride out the volatility. Another reason I don't liquidate my portfolios is because I tend to treat my cash flowing stocks kind of like real estate. Like, I don't suddenly sell my house if it goes up in value, nor do I sell it if Zillow says it's worth 50% less than when I bought it. It's a long-term investment that provides me the utility of living in it, along with an ancillary benefit of usually trending up in value. A better analogy would be that my dividend stocks are like apartments that I'm renting out. I mostly care about the cash flow coming in to pay my bills. I believe that over time they will also trend up in value, but sometimes markets will cool off and other times they will be hot, but I won't sell a rental just because the market it's in has cooled off for a while. I'm investing for generations, not years. Thus, that long-term mindset is another reason why I don't sell my stocks. Okay, another reason I don't sell out of all my stocks is because, as I've explained in my video called Why Dividend Investors Don't Fear Crashes, my cash flow tends to keep going up even if the markets crash. Sure, now and then a company might cut their dividend or whatever, but overall my diverse portfolio of quality dividend stocks tends to trend up over time. I don't have to worry about selling my stocks to make money like non-dividend investors do. The reality is that the cheaper stocks are, the more dividend investors are happy because it allows them to grow their income faster. Dividend investors win in all market conditions, whether things are going down, sideways, or up, and we keep winning as we own more. Anyways, those are some key reasons why I'm too stupid to sell my dividend stocks, and if you feel that my strategies are too stupid, then the good news is that there are tons of financial channels on YouTube, so I'd encourage you to find ones that you like and can relate to. My point for my troll is that maybe being more of a stock trader aligns to your strategy for wealth creation, whereas my strategy is buy and hold. Anyways, another reason I don't sell, part of the reason why I align to dividend investing, is that I value my time and I value simplicity. And I've learned that doing nothing in the markets often yields better results than constantly mucking with your portfolio. It's common to see newer investors who say they're buy and hold investors, but then they do things like sell out of their portfolio, or trade stocks, or go into penny stocks, or whatever. And those new investors also seem to jump around from investing strategy to investing strategy. It's not always bad, it's just something I've observed. Thus, my laziness and desire for a low-stress lifestyle is one where I'm happy to do nothing and just let my dividends pay out. So I guess I'm not only stupid, but I'm also lazy. Fortunately, I don't feel the urge to 10x my money by tomorrow. I'm fine to slowly trend in a good direction. I'm happy with my life and content with what I have, and usually would rather do nothing and make money than spend my time buying and selling and trading, and doing whatever to maybe make a bit more. If I was younger, I'd be more excited about accelerating my gains, but I'm happy just plodding along. That's probably stupid, but it works for me. Why else am I not selling? Well, taxes are another reason. Like in the short time I've owned Apple, I'm up over 350% in it. Some of that's in my taxable, so if I liquidated it, I'd owe a ton on taxes. So I'd rather just keep getting the dividends and not having to pay a large lump sum of taxes if I can avoid it. Some people have to sell stocks to pay their taxes, and I try not to be in that situation if possible. Another reason I don't sell has to do with my personal health conditions. I unfortunately can drop dead at any moment, and it's important for me to set my family up so that my cash keeps coming in if I'm not around. My wife is not so hot with money and investing, and if I sold everything and went into cash, then I don't feel confident that things would turn out great for my family. A lot of the things I do, or don't do, are such that my family can remain secure regardless of what happens to me. Why else don't I sell everything if I think a crash is going to happen? Well, I'm not a fan of sitting on cash. Now, much smarter investors hold large cash hoards, then when we have a crash, they go out and buy. That's awesome, I wish I was like that. I'm someone who invests money when I get it, as I always can find deals out there, and as long as I'm mostly right, then that works out over the long run. So hopefully all of that explains why I'm too stupid to sell out of my dividend stocks. And let me reiterate this next point. Do I think we'll see a big crash? Yes. Do I think it's sooner rather than later? Yes. Am I selling my portfolio then? No. And hopefully between this video and the others I've called out, you can now understand why. Speaking of portfolios, M1 Brokerage has a promotion running for a free $50 cash bonus for new users. The way it works is you click on my M1 referral link in the description of this video, and then you can either open a brokerage account and fund it with $100, or open a retirement account and fund it with $500. Then you need to keep your money inside the new account for 30 days from the date of deposit to get the free referral cash. Make sure to check the details before you sign up to see what they're offering when you watch this video. Okay, now I'd like to shout out my latest Patreon aristocrats who've signed up since my last video. So thank you Overlord for signing up, thank you Nil Wickles for signing up, and thank you Rico Jr. for signing back up. Aristocrats gain access to my dividend spreadsheet product that I use in my videos, and they gain access to multiple private channels on my free Dividend Discord chat server, where I let my upper tier Patreons watch my videos before I release them to the public, as well as let them vote on which thumbnails I use for my videos, and of course they get more direct access to me. And if you made it this far in the video, then please hit the thumbs up button, subscribe if you haven't yet, and click that bell notification. Finally, I highly recommend that you join my free Dividend Discord chat server, which has thousands of dividend investors on it and it's growing all the time. We run the gamut of an investing experience on my Discord, including we have at least a dozen people who have over $1 million invested. We also have a YouTuber on here with over 2 million subs, and we have a former NFL player in the Discord, and of course thousands of other fascinating people. The majority of folks are newer to investing, most folks just lurk, which is fine. Everybody who's kind and can align with the server rules are invited to join and stay. So thanks for watching this video, stay positive, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.